Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well, and if you're new here, every Saturday we break down the latest news and the hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee, which today is from my favorite Onyx coffee roasters. That being said, in today's episode, I'm talking about the bullish case for Bitcoin and crypto mass adoption, our usual 404 logic not found segment, and more. So make sure that you stick around for all the updates we've got in store in today's show. Now, if you like crypto, please do subscribe to the channel, hit the bell notification button, or follow the podcast on your platform of choice. You get a heads up whenever I post new episodes of Crypto Over Coffee. Now, just a friendly reminder as well, please be aware of scammers that are all across social media. They're on Telegram, Instagram, WhatsApp, Twitter, all the above. They're pretending to be me, asking for money or personal information. I will not reach out to you. I won't ask you for money. And if you get a comment on YouTube that asks you to contact me on WhatsApp, just report it because it isn't me. So please be safe out there. And remember, if you leave a comment on the YouTube video, you can be entered to win a Keystone Vault Pro hardware wallet. So make sure you leave a comment. Now, I'm not going to make any wild price predictions here, so I'll make that clear right up front. But I want to lay out the bullish case for Bitcoin and subsequently cryptocurrency at large that usually follows a good Bitcoin move. Now, a fair warning as well, this is the bullish case, and I'm hedged for a bearish case, and you should be also. So don't bet the farm and lose your shirt by only looking at one side of the story. I'm preparing for both scenarios. Enough preamble though, let's get into it. Right here, right now, as of the time of recording, Bitcoin is up over 15% on the week, holding that line above 40K. And now we've talked about the Federal Reserve and rate hikes and how macroeconomic conditions can make or break risk on assets like Bitcoin. And that holds true here. It's the biggest risk that we have to look at. However, there's also a potential setup for the perfect storm that could send things in the opposite direction, a positive direction. Recent economic reporting showed that the U.S. Consumer Price Index, or CPI, which is a key inflation measure, rose by 7.5% over the last 12 months, far outstripping an already bleak forecast from economists leading up to this point. Now, this type of inflation hurts people directly with the rising cost of everyday goods, including necessities like food, for example. And the currently floundering economic recovery is looking ever more dubious. So let's say that the Federal Reserve has to take a step back from its plans for rate hikes, change course, things worsen. Heck, maybe the money printing has to begin anew. Then risk assets become wildly attractive yet again. And then you can pair that with the fact that institutions have not stopped buying up Bitcoin during this period of downturn, further exacerbating the already illiquid Bitcoin, at least in terms of how it is on the market, with a reported 70+% of circulating supply living off of the exchanges these days. In fact, there's a similar dynamic with Ether as well, if you think about it, because supply just keeps moving out to external wallets and off exchanges at a rapid clip. So if there's a sudden ravenousness to the demand for Bitcoin or Ether, some of these blue chip cryptocurrencies, then you have a situation where, based on supply and demand, things pop off rather quickly market-wide in the positive direction. And when Bitcoin moves, the market moves with it by and large, including the golden children of this current time, which is the Metaverse and gaming altcoins. As you know, when these markets move, they move really, really fast. And this strained circulating supply, along with potential shifts in macroeconomic conditions and the new money that could roll in under the right circumstances and conditions, this bull case could materialize. But make no mistake, this is far from guaranteed. In fact, it's probably less likely than the alternative. And we are in uncertain times. So it's critical that you prepare for both best and worst case scenarios and keep your eyes and your mind open. Because confirmation bias is what will get you stuck with the worst outcome possible, like holding through an entire bear market, having sold at the bottom. For me personally, I'm placing my heaviest bets on coins that I believe in long term, well beyond the time frame that this bull case or the opposite bear case could materialize. I have no issue holding through a long bear market if things take a turn for the worse, and I will gladly take profits if this bull case ends up coming up aces, which I hope it does. According to my bear market prep plan that I shared with you several weeks ago now, I've already shed off any altcoins that I don't have long-term conviction in, and I'll look to make strategic plays in gaming, in Metaverse, and mostly DeFi altcoins that I like long term if we do get another sell-off or a more extended bear market. So this is just a little insight into what I'm up to in the markets and how I evaluate the ever-changing conditions as I plan on an ongoing basis. So if I had to play a game of probabilities, I'd say that the macro trends still lead negative for crypto and equities, and we're still going to get rate hikes, but it's always good to evaluate the opportunities that may lie ahead as you rebalance and you set up your portfolio and make a plan, because things can change at a moment's notice. And speaking of plans, one of my most critical pieces in my crypto investing plan is my crypto individual retirement account, or IRA, from iTrustCapital, one of the sponsors of my channel. The pre-tax IRA that I have with iTrustCapital allows me to trade crypto in a tax-free or tax-advantaged way, meaning I don't accrue capital gains or losses in the process of trading crypto, letting me swing trade price movements or sell off methodically at higher prices to buy back in lower without worrying about each individual trade's tax implications. So US crypto investors can add this tool to their arsenal and get $100 in Bitcoin for funding their account using the link in the description and the pinned comment. Make sure you consult a tax pro to figure out what works best for you and your own tax situation. Now, it was reported midweek that the world's largest asset manager, BlackRock, would be getting its hands dirty with crypto. More specifically, BlackRock is purportedly moving to offer crypto to its clients directly with options for lending with crypto as collateral. This to me was a surprise, at least in how they were going to go about it, if it turns out to be true. Not too long ago, people were foaming at the mouth in anticipation of BlackRock's entry into crypto when they hired a blockchain-focused leader at the company. But having seen how these big companies operate firsthand, just because you see them hire someone doesn't mean a product ever sees the light of day. And with that being said, it does seem like there is some legitimacy to the claims that these sources reporting that the $10 trillion asset manager will be offering some sort of crypto exposure to its clients sooner rather than later. And that's certainly something the markets will enjoy seeing come to fruition. What I'd be most curious about is if they offer direct crypto, like direct investment in cryptocurrency in custody or in individual user cold storage, not just ETFs or indexes that give indirect exposure to crypto. Only time's going to tell what this turns out to be and if it comes to fruition, so we'll have to wait and see, but it could be pretty exciting. Now, for years and years now, people have asked me when I think the mainstream adoption of crypto will finally be here. And it may surprise you, but I feel like we're actually on the cusp of it right now. We're seeing mass adoption happen before our very eyes already. I mean, look no further than celebrities bringing NFTs and cryptocurrency into the zeitgeist. The vocal critics are getting louder and louder and more aggressive against crypto in a variety of different ways. And everywhere you turn, you have a big company after big company turning an about face to delve into this world that we've been in together for years now. Not to mention that you have several sporting organizations around the world becoming crypto focused, welcoming crypto sponsors, and you can almost bet your butt that almost none of them would have considered this even a few years ago, given how niche crypto was back then. And so just in the recent past, you have the Washington Nationals with a sponsorship from Terra, Manchester United, a huge football club, agreeing a kit sponsorship from Tezos. You have Bitstamp sponsoring the Immortals esports crew. I mean, it just keeps adding up and adding up. Now, this global awakening and awareness does not necessarily equal adoption, because no, not all the people that know about it are actually using the technology. But this is how it begins, the proverbial match to the kindling, if you will. So we're on the edge of a breakthrough moment for this space, and not just in this space, but I think outside of the space, but both the technology and the community has to mature to meet the demand and the change that's going to come as a result of this increased awareness and scrutiny. In other news, the popular NFT marketplace platform Ethernity Chain just laid out its vision for the future of the project, and it is pretty exciting to say the least. So for those who may not already know of Ethernity already, it's an NFT platform on which big brands and IP holders and public personalities can create and launch and market their own NFTs. So you have big names in sports like Shaquille O'Neal, Alex Ovechkin, Lionel Messi, and big cult brands like Toys R Us, for example. Us 90 kids love that stuff. And they can launch NFTs on this platform for their fans. And in the future, Eternity's vision is to have a social platform driven by fan tokens for those brands, creators, and celebrities that they can use to engage with their fans and provide them value. This platform is dubbed Fanable. You also have a white label marketplace product on the way where creators can create their own digital NFT marketplace offering, as well as a digital art focused platform called iCandy, which will focus on like top tier digital art. And at the center of all of this is the idea that each NFT is verifiably issued by an original artist, brand owner, IP owner, creator, etc., that's validated through the platform so that owners can be confident that they have a legitimate piece of digital property and not a fake. So all of this exciting vision is probably what drove a $20 million seed funding round for Ethernity Labs and likely more funding in the future. Ethernity Labs, by the way, is the parent organization behind this work. And I'm really excited to see how Ethernity can push the adoption of NFTs to the next level. And I'm a fan of their vision for their products personally. But what do you think? It's time now for Rational Reactions, a somewhat new segment on the show where I kind of in a quick fire way read headlines from tech and crypto related publications and just give you my instant reaction without really even reading the full article. So let's switch over to the computer and we can go ahead and get started with this segment. All right, we've got the first story of the day. It's from CoinDesk and it's a market focused one. And the title reads, Bitcoin miner CleanSpark surges on plans to sell legacy energy business. BTIG analyst Gregory Lewis sees higher growth with the company's new strategy. Now, obviously, my reaction is going to be less about this individual company, and I don't know a ton about CleanSpark, but I think you're going to start to see Bitcoin mining, especially in North America and especially in the West, start to be an attractive area for legacy energy legacy energy companies, because they have a lot of the infrastructure that they need to produce and to use the electricity to mine Bitcoin and to facilitate proof of work mining. Likely Bitcoin's going to be one of the only networks that continues to use proof of work. It will not change away from it. I can almost guarantee you that it is not going to change. What's going to end up happening is clean energy production, renewable energy production is going to be allocated big time, and investment's going to be made big time in renewable energy to fund Bitcoin mining. And renewable energy, scalable, cheap renewable energy is going to completely change the landscape for Bitcoin mining and the narrative around Bitcoin mining as well. So I think it's really interesting to see legacy energy companies dropping their traditional business lines and focusing on Bitcoin mining. And it's a storyline that I think is going to continue to be relevant in the future. Now, this next story is also from CoinDesk and it's policy related. And this is actually relevant to my last video. And it's actually kind of an amendment, which only recently, after I posted my last Crypto Over Coffee, was made a little bit more clear by tax pros. But anyway, the title reads, Crypto tax pros throw cold water on staking excitement. Recent media excitement over a lawsuit partially funded by the Proof of Stake Alliance, POSA, has caused confusion over crypto taxes, but experts say it's best to remain cautious. So as a bit of backstory, a Tennessee couple had opened a lawsuit against the IRS saying that their staking rewards from Tezos were actually not income. They were basically citizen created property or taxpayer created property, and thus should only be taxed upon disposal of those assets. It was originally reported as if the IRS was awarded, or rather a decision was awarded in court against the IRS that they would have to refund the couple. But instead, it seems that the IRS was just trying to put this case to bed. They said, we'll refund you, just drop the issue. Now this couple is pushing to actually get a court precedent, which would establish what we talked about last time, that maybe there's a legal backing to the fact that staking rewards are not income at the time of creation, but only disposable. When you dispose of them, do you have to pay taxes? So not quite as good as I think it was originally being reported as, but this could still unfold to be something significant in the grand scheme. Tax pros, though, are saying you got to pay taxes as if it's income. Be cautious, be smart about it. So really, that's all I have to say on the matter. It's going to have to develop over time. We'll see what happens. Next story is from Cointelegraph. And it's titled, iOS Jailbreak Dev Wins $2 million Bounty for Finding Critical Optimism Bug. Now, when you find bugs in software, I feel like people in the markets kind of panic. They're like, oh God, like, is this bad? Is the protocol not good? Like, is optimism too dangerous to use? Sometimes that's the case, but people, I think, overreact to bug bounty rewards. It's actually a really good thing. It's good because when you have bug bounties being awarded to white hat hackers, basically hackers that are doing this as a job, trying to find vulnerabilities in order to help protocols and help platforms secure their stuff. This is a really good thing. This is meaning that because these bugs are not going to be exploited in the wild by people who are up to no good and actually want to cause damage or actually steal, you actually are in a great place. And so a $2 million bounty to a developer that found a bug in Optimism that was not exploited in the wild is actually a piece of fantastic news, and it should make you feel more confident in Optimism. Now, I want to tell you one thing that is incontrovertible. All software is going to have bugs. There is no such thing as a piece of software, particularly a complex protocol like this, that will not have bugs. And so it's very important to have bug bounties, and very important that these bugs are found and that they are incentivized properly, because hackers that are up to no good, they're incentivized by the rewards they can get to actually exploit these vulnerabilities that haven't been found by good actors. And so therefore, you want, to the greatest extent possible, these bugs to be found by people who are incentivized to find them, but are not up to no good, looking to hurt the protocol, if that makes sense. So nothing to worry about here. People should panic less about this. Last one is from Bankrate. It's a very simple headline. Can you use a personal loan to buy cryptocurrency? No. Well, you can, but just don't. Don't ever do that. The personal credit thing is probably the most pervasive and awful thing to have ever happened in society. Personal credit gets people crushed. You have high interest consumer debt for people to buy things they don't need or buy things they can't afford. If you have to take out a personal loan to buy crypto, or you have to take out a personal loan to buy a pair of shoes, you shouldn't be buying the pair of shoes. It's really that simple. Or you shouldn't be buying crypto. And I will tell you right now, you definitely should not be buying a speculative asset that you don't understand with a personal loan with high interest, because you could very well get in a position that you are underwater like nearly instantly. So please, for the love of God, or whatever you believe in, do not use a personal loan to buy crypto. It is the dumbest thing you can possibly do. Please don't. Please don't. That could have been a 404 logic not found, but it was not. Actually, though, 404 logic not found is next. So let's go ahead and knock that out as well. Now, ladies and gentlemen, as I just said, it is time for 404 Logic Not Found, and for those of you who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails or otherwise stupid moves in the world that need to get some attention. Now, if you like 404, you like Crypto Over Coffee, make sure to subscribe on YouTube, hit the like button, follow the podcast, you know the drill. Thank you for that in advance. Now, if you thought the Wonderland DeFi Treasury Manager being identified as the co-founder of the defunct crypto exchange Quadriga CX was crazy, today's illogical soup du jour is going to knock your very socks off. So for a bit of backstory, in 2016, the crypto exchange Bitfinex was hacked and over 119,000 BTC, or Bitcoin, were stolen during that breach. Now, on Tuesday of this past week, the U.S. Department of Justice announced that they had ordered the arrest of husband and wife Ilya Lichtenstein and Heather Morgan for their alleged role in the conspiracy to launder that huge sum of Bitcoin tied to the Bitfinex hack of 2016. In fact, the authorities recovered $3.6 billion worth of Bitcoin from the couple after reportedly discovering the private keys during the execution of a search warrant. The idea that two people living in New York, seemingly fairly normal, made away with billions of Bitcoin is already unbelievable as it is. But if you consider the details around this, it just gets even crazier. First of all, Heather Morgan is evidently a rapper and a serial entrepreneur, which must be a front for her superior hacking skills, if these reports are to be believed, at least. But jokes aside, the authorities were able to link around 25,000 BTC to financial accounts owned by the couple, along with reports that there were purchases made for NFTs, Walmart gift cards, precious metals, etc., that were in the name of one or both of those individuals. Even crazier still, it's reported that one of the private keys, or several private keys, to this Smaug's fortune worth of Bitcoin were stored in encrypted files in cloud storage. I mean, you're telling me that you managed to get your hands on that much Bitcoin and expected to launder it safely without being detected, but you don't even know how to use cold storage? I mean, the logic is so beyond not found here, it's practically non-existent. And first, you have purported money launderers of billions worth of Bitcoin posting comedy rap videos on TikTok, definitely not lying low and under the radar. You reportedly have purchases made that are tied to that stolen Bitcoin in your own name, and then the private keys to the Bitcoin fortune that you have are allegedly stored on the cloud. It's absolutely beyond me how any of this is even real. And let me just put the cherry on top. This couple was trying to commit the money laundering operation of the century on a public immutable ledger with cryptographic non-repudiation at its very core. Great idea, Squidward. Okay, I've fully addressed the lack of logic here, but I also want to give an honorable mention to the mainstream media when it comes to crypto coverage in light of this whole thing. If you look at the law enforcement action and the commentary from law enforcement after the fact, it seems like crypto really isn't such a boon for criminals after all, is it? I mean, we may want to amend our reporting as such because you now have a beautiful trail to audit and find people who are doing this type of stuff. Anyways, I'm very grateful that my friends at Chain Guardians and Chain Boost are the sponsor of today's episode of Crypto Over Coffee, and I'm very stoked to share with you the exciting news about their foray into the Metaverse. Well, more specifically, the Cryptoverse, as this project is called. This past week, the team behind the NFT gaming ecosystem Chain Guardians and the launchpad Chain Boost announced the Cryptoverse, a virtual world that will feature all the things you've come to know and love about the Metaverse concept: ownership of virtual land and digital assets, user-created content, monetization opportunities, a place for builders and creators to create new and unique experiences in this virtual world, an open metaverse. Now, I've been a longtime fan of the Chain Guardians crew, and you know that. I've covered them on the show for ages now, and this Cryptoverse project looks pretty incredible. The concepts I've seen are not simply drag and drop elements from the Unreal Engine 5 stock elements list. They are top-tier cyberpunk fantasy worldscapes that seem to have been designed from the ground up. That said, the map will feature 8 distinct island zones on which land can be purchased in an upcoming public sale due tentatively in March, and I've been told that there will be experienced urban planners from the real world helping to design this virtual world, which is unique and welcome in the sense that the normal boxy grid format that other metaverses employ is getting a little stale. I'm pretty stoked to share with you more information about this one, and there will be more as weeks go by. You can follow the latest on the website cryptoverse.vip. So stay tuned. And as usual, this nor any other episode of my show is a call to action to buy tokens or digital assets of any kind. Please be safe out there. Okay, closing things out here, let's do some community Q&A. I always answer questions from folks who watch the show, like you, or listen to the show if you're on the podcast. And I've got some questions from last week's episode that I'm going to answer. And I want to remind you that if you have a question that you want answered, leave them in the comments below on YouTube, or you can tweet me at Hashoshi4 if you are on the podcast side of things. So let's go ahead and dive into these questions and see what we've got today. First question here is from Stefan Uono. How do NFT deal with free creations, arts that the creators have deemed as free, and yet some bad actors are trying to monetize them? Is there a way for artists to create maybe a free, infinitely generating NFT, so their creations cannot be taken over by bad actors? So this is tough. And I think that kind of what I talked about earlier with the on the Ethernity side is I think platforms are going to have to play a part in helping solidify a creator's reputation. At the end of the day, I think we're going to have an on-chain reputation system where you can sort of unify the creations that you've made and even sort of a fingerprint of the digital piece that you've created in terms of the asset, so that it's very easy to verify if you're the original creator of such an asset. But of course, there's going to be these social layers that get built on top, like social media platforms, where you have a sort of reputation. You're going to have followers. You're going to have people who attest to your skill and your art, people who verify with a check mark art that's been created, that it's from the original artist who created it. This is a product of immaturity in the NFT space. It's very easy for me to go online, buy a commercial license to some stock imagery, modify it, hack it and slash it in Photoshop, and then sell it as an NFT, even though maybe that license does not allow me to do that. That is a problem that is not going to be wholesomely solved by NFT developers. It's going to be solved around the ecosystem and some of the things that are built on top of these protocols where NFTs are minted. Because we're in this very immature area of NFTs right now. The technology is just not quite there. So it's going to be a culmination of on-chain things like fingerprinting or checksumming of the actual digital piece, on-chain reputation, off-chain reputation systems, community verification, and then you might even have big names in the traditional art space or in the traditional media space being able to sort of verify on their own platforms and creating a way for them to monetize their expertise of, snooping out fakes and scams to give customers and people the ability to understand what they're buying. So this will come in time. It's going to be something that doesn't happen overnight, but we will eventually get there. And in terms of free creations, I think to an extent, some artists are releasing a free creation for it to be used publicly in the composite or as composite in a larger piece. Some artists don't want that. And so creating that granular access control also might be a little difficult, but I think we'll eventually get there. So I know I don't have a concrete answer. Those are my thoughts. Thank you, Stefan. Next question is from Bad Carol, frequent question asker. Thank you very much. What do you think about future Web3 versions of social media? With resistance to censorship, it'll also be difficult to control undesirable content like fake news and conspiracy nonsense. How do you imagine future decentralized social media will handle that type of problem, and what impact could that have on how we perceive information and trustworthiness? This is another really tough one. I think I picked up like the most existential, hard to answer questions that I could possibly have picked up in this episode. Here's my thought. There are a lot of things that get created on these decentralized platforms that are just disgusting and unsavory. And the reason why those things are not moderated out by the community in the absence of a centralized authority to get rid of it is because they become echo chambers. The reason why all of these decentralized alternatives are just cesspools for just conspiracy, hateful, bigoted crap is honestly because that's where these people can create without getting their stuff taken down. So you get this little echo chamber of like people who agree with that absolute craziness. If you had a platform where there are a lot of wide-ranging opinions and a lot of wide demographics of people, you would start to see self-moderation, community moderation actually working, because you would be able to sort of lop off the extreme opposite ends of the spectrum, and you'd have a wide community governed plethora of viewpoints without a central authority deciding what's right and what's wrong. I think that's the issue. The community is capable of this type of governance, I believe. It's the echo chamber effect that social media has and curation has that causes a completely untenable scenario for anything but centralized censorship type of moves regarding content. Because when you have communities that are only receiving the content that they want to see, ultimately they're not going to be exposed and subsequently reacting to content that they don't want to see. So curation and targeted curation of content actually kind of feeds into this problem. So I think there's going to have to be role-based controls put into place for decentralized social media platforms. There may have to be a panel-based deliberately diversified panel-based platform for curation and for the removal of some of the fringe, way out of bounds type of things. In this debate around what's freedom of speech versus what is well beyond anything that should be allowed is not easy to determine. When you have people spouting complete and utter falsities, it's really tough to say how you deal with that. And I'm not going to pretend like I have the answer. I'm one guy. But ultimately, I think that community governance and curation and not community censorship, but community decision-making around what should be allowed and what shouldn't, I think is the answer. Because at least then, it's not one entity deciding what's deemed as true and what's not. So long-winded answer, there's my thoughts. Last question. Hey, Hashoshi, thanks for your great educational videos. Thank you. What is wrapped Bitcoin and other coins, and how do they work across chains? So wrapped coins in general are basically the process of minting a one-to-one representation of a cryptocurrency that doesn't live natively on a destination chain. So like wrapped Bitcoin on Ethereum, Bitcoin obviously is not managed and accounted for and issued on the Ethereum chain. So what you have to do for Wrapped Bitcoin is you need to put Bitcoin in custody, usually off chain, right? So that would be in a custody provider. And then you would mint using a token contract that's basically has collateral of that Bitcoin that's off chain. So let's say I deposit 1 Bitcoin in custody. That custody partner would then mint 1 WBTC on Ethereum, which is 1-to-1 match to the Bitcoin I deposited in custody. So then I can trade as if that Bitcoin is valued at the exact same 1-to-1 market value as real Bitcoin is, but I can trade it on Ethereum. Same rules apply for other chains. You're basically depositing 1 token on the origin chain, and then you are minting a sort of synthetic version of that, a representation of that on the destination chain. And this is actually a fundamental tool or process that bridges use in order to mint tokens. You deposit into a smart contract on the origin chain, which is locked up as collateral for you to issue the same like-kind asset with the same value on the destination chain through smart contracts. You've got a smart contract on one end, smart contract on the other. Sometimes you have a custody partner on one end, smart contract on the other. So that's really what wrapping an asset is. It's just a synthetic tokenized version, 1-to-1 value of that other asset that lives somewhere else. So that's what it is. Thank you very much for your questions, by the way. I really love answering questions. May not always have all the perfect answers, but I try my best. Now, I want to thank you so much for watching this and every other episode of Crypto Over Coffee. Today's a little crazy. There's construction going on outside, really distracting, hard to talk, hard to think. And I'm actually recording this on Friday because my anniversary is on Saturday when I normally film this stuff. And my wife would be very, very angry if I recorded it on Saturday. So maybe the price of Bitcoin has changed, price of crypto has changed, sentiment's changed. Price of doing business, cost of doing business. Thank you so much for watching this episode. If you have time to stick around, check out some other crypto videos I have on the channel. But most of all, I hope you and your family have a wonderful week and weekend ahead. And until next time, cheers.